I'm Mike Castiglione at Eventus. I'm speaking with Mark Aruliah, Senior Policy Advisor at the blockchain analytics company Elliptic. He was formerly with the UK financial regulator, the FCA. Hi, Mark. Great to see you again.
Hi, Mike, and great to see you too.
All right. So, Mark, you're based in the UK, so let's start there. So, what are your expectations for what's next in UK financial regulations that deal with crypto assets?
So, just going back a bit, before I joined Elliptic, I was at the FCA. So I'm talking as an ex-regulator, as well as somebody from Elliptic now in the industry. I think starting with where we are now, we have the money laundering regulations, which has got crypto changes to it. Actually, before I left the FCA, I was responsible for changing those regulations. We also now have the travel rule coming in September next year, which means that VASP to VAS, they will have to send originator and beneficiary details. So very much typical to fiat being transferred to the crypto world. That, from a UK perspective, I think has been done on a good risk-based approach, slightly different to how the Europeans have addressed it. Not saying it's bad or wrong, but I think the UK approach is much more risk-based. The difficulty we're going to have with the travel rule is the fragmentation and the timeline differences. So that's one of the challenges for that. But in terms of the upcoming regulation, I think there's two elements. One is the changes that the Treasury has proposed some time ago on financial promotions. So crypto financial promotion will be caught. And the other one is also the sort of the unknown, which is how is the Treasury going to regulate more typical crypto tradings like Bitcoin, Ethereum, like we have in Europe. We have MiCA, the markets in crypto assets. What is the equivalent for the UK? And until we have that, we're slightly behind the game with the Europeans.
I'll ask you about MiCA, but first, I wanted to get your opinion on a bill that's in the UK Parliament right now, and it would update the Markets in Financial Services Act. And there was an amendment to this bill recently that seemingly defined crypto assets and expanded the remit of regulators to cover crypto assets. So what does, if this bill with this amendment passes, what would this mean for the FCA?
So I think there's probably going to be a lot more discussion needed in the House of Commons before such a big change comes in. So in essence, that change is saying, let's regulate crypto within this change, within what they call the Financial Services and Markets Act, so which is where securities are normally caught. We'll bring crypto into that and we'll regulate it in that big sphere, as it were. So in essence, it's trying to bring MiCA, which is the European regulation, into the UK and through an amendment. I think that amendment, in my view, is highly unlikely to succeed as a legislative change, but I think the political statement is a very important one, which is growing. I mean, we saw even recently, we've seen the G20, the Bank of England, the IMF all saying that more regulation is needed in the crypto sphere. I mean, part of this is because of the FTX fallout, but it's also quite clear that they realize that crypto is no longer this small little sector, it is growing. And they also know that there needs to be more harmonization of global regulation because there's a lot of fragmentation that is a natural result of regulation coming in.
All right, so to the EU, to MiCA, I mentioned that a few times. Elliptic has explained how MiCA really matters because it's a sweeping attempt to cover market conduct, consumer protection, as you mentioned, disclosure, and it could also be a regulatory model that the EU exports globally. The EU has a knack for doing this. So right now, when you're talking with clients or prospective clients, how do you recommend that firms prepare for MiCA?
So MiCA is a big beast. And I mean, 3 years of my life I spent in Brussels negotiating European files, so I understand the European process. I mean, the first thing is be aware it's coming. Don't leave it to the last minute. And I think this is the biggest issue for small, medium-sized firms, that you leave it for too late and then you have a huge hill to climb. So understand the changes that are coming. I think It's 380 pages, so it's a big beast, and there's still a lot of what they call level 2. So we have European authorities called ESMA, the EBA. They'll all come out with other pieces of the jigsaw, if you like, over the next month. So
This is the detailed implementation that can run hundreds or thousands of pages long, right?
hopefully not hundreds of thousands, but it could be a lots of
I'm sorry,
pages.
hundreds or thousands.
So it is, and so the ESMA process normally has a level of cost benefits and a bit of industry engagement as well. So hopefully it's going to be a little bit more transparent than sometimes the European process when they go into, if you like, the trilogue discussions. So one hopes it's slightly more transparent. But for the firms, it means clarity is still not here in absolute terms, but nevertheless, they should understand what's up and coming. To me, I think the biggest changes is fundamentally you are moving from a different skill set in your compliance team. You're going from a pure money laundering AML compliance officer to somebody who's going to be much more conduct and prudential and have to things like, you're more familiar with, Mike, in terms of market manipulation, trade surveillance within the venue, all these things, prudential obligations, all these things will start coming into it. It's a very different skill set, different team for compliance that they'll need to have. Even looking at financial promotions, again, there's going to be a lot of guidance that's going to come out for that. MiCA also requires you to be established in the EU. So the biggest thing, I suppose, you first start with, am I caught? Are my customers that I'm marketing in the EU?
Right.
And that's really important to find out, because if you are, then you may need to consider whether you need to be established in the EU or have an establishment in the EU.
That is, even if you're a non-EU firm, if you're doing business or you have clients in the EU, you might have to get licensed.
Exactly. If you are marketing, and this is always the question of the way that regulation is now being fragmented. The two big issues that really bites on venues, crypto exchanges, are financial promotion. What rules do I have to apply with in a particular jurisdiction? And the other one is solicitation.
Mm-hmm.
How can I solicit customers in a legal and proper way in a jurisdiction? So the question is, are you targeting those customers? And that might mean if you've got an existing customer, but you are then subsequently sending them emails, which is targeting them, you might be deemed to then be targeting European customers and so be called by MiCA. So there's a lot of assessment that you need to do. And part of the world being fragmented is everybody must start to fragment your customer base. Am I from Europe? Am I from Asia? Am I from the UK? Am I from the US? And that complexity comes into the compliance structure as to what needs to be done. I think the other thing, as I mentioned, other controls such as trade surveillance, market manipulation come in. Some firms have that, some firms don't. Other issues on systems controls will also come in. Reporting manipulation to the regulator, ensuring you have adequate capital, what type of capital. Lots of things comes in. Conflicts of interest, insider dealing obligations. So it's a whole raft of change which moves you from the dial from being just money laundering slowly to being, where I mentioned MiFID, the securities regulation. Right. So it's a slow transition to being fully under the remit of the regulatory framework of the Europeans.
I want to get your take on anti-money laundering.
Okay.
Because your clients at Elliptic certainly are really focused on AML. AML includes what you'd call typical crimes, the continuing threat of terrorism financing, and now we have robust sanctions against Russian entities. So how has the industry adapted to this ongoing challenge?
So I think starting with the if you like typical crimes, if anything is typical,
yeah,
I think obviously you need to use a blockchain analytics firm like Elliptic, because obviously a lot of it is transaction based. Some of it is KYC, some of it is transaction based, which goes into your knowing your customer. All of that is relevant. I think firms are beginning to understand it. We are having dialogues with our own customers, understanding how they risk calibrate. One of the things that we can do with our system is, create the risk categorization for when a transaction alert is sent in a much more flexible manner using Elliptic's tools. So I think that's one thing that's been happening. I think sanctions has changed the dial quite a lot, even for regulators in Europe and in the UK. And it's quite clear that now sanctions is, front of mind, top of the tree in terms of having to ensure that you're dealing with it. Some of the changes that have come through have been slightly more complicated changes, because if you like, the Europeans in the recent sanctions have started to, if you like, sanction Russian individual or a Russian national. Quite tricky. We've tried to help customers by putting in risk categorizations, of putting jurisdictions that they can alert them to, but also, it has to be linked into the KYC. But I think what I see happening most for firms, actually it plays to one of our new products that we're bringing into all of our tools, is the way that criminality has become more sophisticated. So no longer is it going from a simple ransomware attack or whatever, going to an off-ramp exchange and getting your fiat out and quickly going off. It's much more complicated. It's going from, if it's an attack on a stablecoin, it's switching it to an Ethereum, maybe on a DEX, then going to a bridge to convert it back to a stablecoin. And it goes through a very long, if you like, obfuscated channel. So our new approach to screening takes away this kind of linear screening of Bitcoin or Ethereum or anything. It basically merges all these kind of assets to one. So we are now screening on an asset and chain agnostic basis. So it looks through all these different types of interactions that helps you look at through the different bridges. Where's it come from? Where's it moved to? I think it's quite an amazing technology. And I think it shows you, and I'm sure other analytic firms will look to follow this. It's not, something that's something that we've just thought of. It's something that we followed in terms of identifying risk. It's something that FATF raised in terms of their June report, but it's clearly where risk is moving to, from the linear to the more complex. And that's what I think we've been engaging with firms on, what we call our holistic screening methodology.
That covers the questions for today. Thanks, Mark, for sharing your insights. For our viewers, learn more at adventus.com or follow us on social media. And please, as always, send us your questions or comments. All right. Bye for now.
Thank you, Mike.